All right. Welcome back. Um, let's get started. Not much to talk about, and that's why I delayed it today. There's nothing really going on. Um, Market leaders are not doing anything. The market is just, buying its time, not doing anything significant. Of course, there's always sections of the markets that are going to be doing something, right? But from the macro perspective uh, of everything, just looking at everything, there's nothing really much to talk about. All right. Now, we'll go through it really quickly. I'm not even going to bother stopping and uh, talking about waves today, right? But I do want you guys to uh, be familiar with them so we speak the same language and we understand, at the very least, why I'm saying what I'm saying and how and so forth. All right. So, equal weighted um, S&P previous highs, dividend weighted, pumping a little bit higher. The VIX is falling a little bit. New York Stock Exchange is above the previous high, right? The vaccine. Dow Jones, right at the above the all-time highs here. Came back, all right, and then it's moving lower. S&P broke, popped back up, and this is adjusted now. I had it like this, and this makes it a structure below a structure, by the way. I know I'm not supposed to talk about charts, but I can't help it. But I'm just explaining why I gave it the benefit of the doubt. There's now been two breaks, but no follow through, right? So remember, what's it trying to do? How good of a job is it doing? And as you can see, it's not doing a very good job of following through to the downside and correcting, right? This is a very sharp move to the upside. So Uh, that's why I gave it the benefit of the doubt. It's back up above the crossing of the line in of itself is not a big deal unless you're charting it. But clearly, this is not something that's chartable. It's a particle market. Uh, but crossing the line um, is not necessarily a big deal, okay, in terms of trading. Nasdaq up against resistance. First, we had this. We were looking for a sharp move down. 1, 2, 3 down. A sharp move didn't happen. All right, fair enough. Then we went to this yesterday, right? That didn't work, right? Continues to go sideways, corrected through time, and now it's right building pressure at the bottom of this structure. Even if I adjust it and give it the benefit of the doubt, right? Uh, it ends up being a little bit funky, and I'll tell you why. And this is no longer valid now if we adjust, right? It's an expansion. So if this is not valid, then we end up with this as a B. And C is where? I don't know. It's not countable. It's not measurable. All right. So if we were to expand the structure, the highest point is here, right? But that fucks up everything because then you end up like this, right? Looks a little funky, doesn't it? A little bit funky. So uh, this correction through time now, it's not doing what it's supposed to do, basically. All right. So even if again we give it as a possible B, ending B, Of course, now everybody decides to call. If we give this the benefit of the doubt that this is a B, then C should follow, right? At least to the previous low. But every time we've done that in the past, it hasn't worked out. It's just been correcting through time. Not a little bit of a move up. If you measure it from the previous low, it's only up 5%, and if I'm not mistaken, the last 4 trading days. Okay, so there's not much there. There's not much there. We'll see. We'll see how this is going to pan out. All right. I'm going to keep it like this for now because I think this encompasses more of what's going on in the markets than what I just had on there. And I'm willing to overlook these little small structures here for now. For now. Only because it's just more after hour stuff. All right. Now we'll talk a little bit more about the macro in a moment here. But in terms of charting, we'll leave it like this. Okay. Small caps pushed up, broke, I guess, yesterday's previous highs. Okay. Still hasn't broken the top all the way up here. It's still in a rising wedge. You have multiple pullbacks and new highs, pullbacks, new highs. And when I'm saying new highs, I mean from here. Okay. All right. Transportation. Pushing up, trying to go to that top. Hasn't done it yet. Google and the fangs. Right. Little bit higher today, but it's still in this little flag formation. All right. Something like this. Whenever it gets done, then we're looking for more downside. Okay. Hasn't happened yet. World Stock Market Index has continued to follow through. Now this is going to be interesting, and pay attention here, right? Jets pushing higher. China weak within the structure week. It's at all-time highs. Breaking the previous highs, having difficulties. Emerging markets continue to push higher. Okay, so just kind of look at this, right? 1, 2, 3 up. Yeah. Emerging markets, the same thing, incredibly bullish. Japan, really happy, right? Going to the moon. Australia, mate, moving up very nicely. Got a whole bunch of red dots over here, okay? So it's in a wave 3 up. Nifty 50 continues to push higher. All-time highs. All-time highs. Look at that. They don't have hospital beds to treat their patients, but the stock market is going higher. Cosby, beautiful breakout. Even Europe now is breaking the trend line. Okay, even Europe, wave 3 up. Germany, testing. This is a head test, right? Still consolidating here. Is this building pressure for more upside? Don't know. Possible. We'll chart it to keep this in mind. All right. But again, the more important aspect is that it's testing the head of this head and shoulders. Right. Typically what happens is this fails. But again, doesn't mean it can't go higher. UK finally came really close to the previous high. And remember, they usually come at just prior to the previous high and fail, just at the previous high and fail, or just above the previous high and fail. Right. So these areas in here tend to become very dangerous. Okay. Once you clear them, well, then you're off to the races, right? Then you don't have to worry about it as much. Especially in this particular case, you wouldn't have to worry about it until it got to about 7,100, somewhere up here. 71, 7,500. It would be clear path to the top. But again, you would end up with something like this, which is a 1, 2, 3. Then you draw the chart pattern, and it's bearish. Okay. So keep that in mind. Taiwan continues to push higher. You see the theme here? Remember I told you, pay attention, look at the world stock market index pushing higher. Why is it pushing higher? Certainly not because of developed countries, right? It's because of emerging markets. If emerging markets are doing well, what does that mean for the dollar, right? Remember, weakness in the dollar, strength in the foreign currencies, strength in the economies for emerging markets. And that's exactly what you're seeing, right? Across the board now. And we'll get to the dollar here in a moment. Brazil, Combate Mundial de Brazil, pushes higher, right? Coming to that previous high now. 1, 2, 3 up. Okay, remember this structure? Go back to the old videos, and I'm like, this is bullish. This is bullish, right? You'll see that, hey, look at here. It didn't have enough selling power to get to the bottom of the channel. Bullish, right? And here we are, pushing through. All right. Saudi broke the previous high. Okay. This was break the top. It was supposed to follow through, failed, and we ended up with this structure here. Now, in bare knuckle charting, we have something that looks like this. Okay, it's more wedgy, but whatever. And then what happens is it breaks and then continues higher. Right. So that's one of the formations. Maybe I'll look for it. See if, well, I can't do it here, but maybe I'll post it. Oil. Let me go down to a smaller time frame. Oil broke down, structure below structure, broke down again, and then didn't fail. What's it trying to do? How good of a job is it doing it? All right. So think about these things. When it's starting to do something like this, even though it's near the point of control somewhere, and it's holding up, well, you got to start questioning it and saying, okay, well, it's not doing what it's supposed to. So you either stop out because you don't know what it's doing, or you flip because this is turning out to be a high base. So do you have the macro to back it up? Well, if you assume that the market is going to price in that global demand will rise from these levels, it doesn't have to rise to infinity, right, back to normal, but that it has to rise from here because emerging markets are going to be doing better, which is what we're seeing, right? That's the message of the market so far. Then you have to assume with a weak dollar and emerging markets, doing better, that oil will likely push up. How much would it push up? Well, it doesn't have to push up to $80, right? But something in the 40s, mid 40s, right? 45, something like that. Well, that's a 10% move from here. So that's something you got to consider, right? Depending on how your portfolio is set up, what you're trying to do. Right now, with what this structure is saying, what the emerging markets are saying, you got to start to consider this as a nice either hedge or a nice play to the upside. Okay. Again, within this structure here, within this. All right. And now we can actually, this is enough of a hook. We can actually expand it, right? And this is where price has been since June, right? It hasn't gone, let me get this off, hasn't gone anywhere. And again, my interpretation of this is that oil companies are hedging against themselves, that there's not going to be demand. So they step in, they short against oil, against themselves. And as soon as price falls to a certain level, right, they start to unwind some of that short, which means they have to buy, and then they bring it back up to equilibrium, and then it gets a little bit too high, and then they start to hedge again, and that's how you end up with a sideways oil market. All right. After this fuckery here, this to them is good. This to them is good. So remember, oil is funky. Oil is funky because within a certain limit, they can kind of control it. And then once it starts getting to extremes, they lose control of it. And then OPEC has to come in, it has to, start having meetings about cuts and blah blah blah. It's more bullshit than anything else. But you know that's a sign. If OPEC is stepping in, that's a sign they lost control of the oil market, and they're trying to figure out what the fuck to do next. Okay. Beautiful Bitcoin move. Incredibly bullish. We were talking about this. I said, I think yesterday or the day before, look for 17,000 to hit. Not only did we hit it, but we exceeded it. It's up 6% for the day. All right. Um, how long before we get to the top, huh? How much? Look at all these dots. I don't even know what these are. How much longer to all-time highs and beyond? Because this whole entire move is a wave two. So think about that. Think about the big thrust up, right? And then, sorry. So you have the big thrust up, 1, 2, 3 up. You have the pause, 2, and now you're getting the breakout. And the breakout suggests that you're going to go way above uh, the previous highs. It's a big move. Now, granted, waves can end just at the previous high or just before or just above it, blah, 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 and then start to go down. That's possible. That's possible. But again, that will end up what? That would end up looking like this. Okay? Let's say it failed here, right? It's still bullish. It's still bullish. So let's measure it because sometimes, the chart is deceiving to the eye. How far are we from all-time highs? Only 10%. Only 10%. Go back to my summer video 2 years ago. When I start saying, you want to be buying Bitcoin, you want to be buying Bitcoin, you want to be buying Bitcoin, right? And people were like, oh yeah, it's over now, blah, blah, blah. Yeah, I heard all kinds of shit. Remember, when they start talking about Bitcoin and they're advertising it and everything is great, that's when you want to sell, right? When they're shitting on it, that's when you want to be buying. It's amazing, and it's not that you're just doing the opposite. It's not. It's not. It's just there's a price level for everything. When it was going up, there was no bigger bear uh, on the planet than me when it was doing this shit. I can't tell you how many times I said short, short, short. This is bullshit. This is crap. This is too much. This is excessive. Right? I was wrong the whole time for, I don't know, months. Right? Eventually got the pullback. Yeah, but what kind of a pullback is it? 84%. 84% pullback. So don't look at this stuff over here. Look at this. It's an 84% pullback. And then when I start saying buy, 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 oh, Nick doesn't know what he's talking about. And here we are today going to all-time highs and more likely than not beyond. But who remembers? Nobody. Yeah. People want action. They want it now. They want me to say it today and tomorrow it happens. And if I don't, well, Nick is wrong. No. This is macro, man. This is macro. All right. Forget about this Ethereum stuff. Uh, it's okay if you're bored and you're looking for a trade or something. That's okay. Gold. All right. Some difficulties here. I don't like the structure, which is kind of funky. It's funky because if you're going to get the stimulus, then gold is going to go higher, right? But it's showing you something bearish. It's back into structure. There's a lot of faults to it. I'm trying to give it the benefit of the doubt for now. Eventually, I think it's going to go higher. But when you see these kind of things, big drops, flagging out, you gotta be cautious. You gotta be cautious. And remember, that's what bare knuckle charting is all about, right? risk reward, picking your points, picking your battles. It's not about fortune telling. Real estate pushing up a little bit higher, but not previous highs. Commodities, here we go again, right? What's commodities doing? Same thing that we talked about before, that if you're going to have a weak dollar, you're going to have strength in emerging markets because their currencies are going to increase in value, and that's good for commodities, right? You see, I've been saying this now for months, that at some point it's going to come. Is this the point? I don't know. I don't know. But you're seeing the structures, you're seeing the breakouts, you're seeing the theme, you're seeing what the message of the market is. My fear is that we're going to have a big sell-off, okay? One more big sell-off before the vaccines and everything comes. And you'll get one more down and then up. My Parkinson's, right? So you get the drop and then you get the big pop. I don't know if this is it where commodities start to go up. I don't know. Certainly the economy is not doing well, and we'll talk about that here in a minute. The cases are not doing well. We have so much uncertainty with what's going on with Trump. The guy is trying to throw a coup. He's beheading everybody in the Pentagon. He's getting ready to, I don't know what the hell he's doing, burning down the house. There's a lot of craziness that's going on. So, we'll see. We'll talk about that in a minute. Palladium pulling back, copper holding up, base metals breaking out incredibly bullish. Look at that. Look at that. But again, it's in a wave 3 up. Okay. Wave 3 up. Agriculture, look at that. Boom, baby. Boom. I was talking about that at 1458, I think. Go back to the old videos. There was a little bit of a scare right in here. Broke out, pulled back, tested the previous highs, and then finally took off. All right. Precious metals, they're right back down into structure. Fuckery move here. Commodities overall, they're building pressure above the structure. Sugar cane, resistance, multiple. Same thing with corn. And these are the charts that I start looking at. This looks bearish, right? It has a bearish structure. This has a bearish structure. The wave 3 up is a bearish structure. Steel, let's adjust this. Okay. It's broken out clearly, so it maybe needs to pull back a little bit, consolidate, and then continue to push higher. Soybeans have just fucking exploded, right? See ya. So let's finally get to the dollar. So here it is in the dollar, and it's pushing towards the low end. It's not breaking through yet, but when you look at the euro currency index, you're going to see that that's very bullish looking. We know there's stimulus coming, so there'll be more money printing. We know that this is a very key area in the grand scheme of things, right? Because this could be a multi-year reversal, right? Just like we had them before. You had one here, one there. Okay, so if it's breaking this structure, then we're going to end up in a multi-year down cycle in the dollar. And nobody can argue that we're excessively printing, right? Give me 1 second, please.
Mic off. Mic on. Mic feedback off. Mic feedback on.
Okay, so sorry, I'm back. And then so then you look at the message of the markets. You look at the commodities, how they're behaving. You look at the emerging markets, how they're behaving. You look at the emerging market currencies, how they're behaving. And everything is pointing to dollar weakness. All right. So keep these things in mind. It's the message of the market. Connect the dots. It's not rocket science. Special drawing rights are pushing to new all-time highs. Palladium in a wave one. Let me look at it. I just had it up here. It needs to correct. I think you're right. Yeah. Yeah, because this. Let's do a bigger analysis on this one. All right. So this would be. Let's do it. So this is the 1. This is the 2. This is the 3. No, incorrect. Oops, the whole thing moved. 1, 2, 3. No, incorrect. 1, 2, 3. Correct. So here's what happened. We had the big thrust up move. 1, 2, 3. Wedge, right? Tested the previous low. Took off. Then it went into a sideways market. Okay, 1, 2, 3, and then up. So this would be a wave 3 up from this one. Okay. So then what you do once that happens, oops, I'm gonna take out the other tool here. Let's say this is the top right here. You end up with this. All right. This is the correct counting of the waves as far as Palladium goes. Because now you end up with an ending pattern from ABC wedge to a 1, 2, 3. Wave 3 up. All right. Structure is defined. Anything within the structure is bullish. Blah blah blah. You guys know the deal. All right. Thank you for your question, Duncan. All right. So let's get back to U.S. dollar Japan. U.S. dollar is falling. Euro USD continues to push higher. Okay. So what we're looking for here is a big thrust up move, a correction, and now this needs to follow through. All right. That's what it looks like. Pound. Okay. Anything in the pound in this area has been resistance prior. If the dollar is to go, it has to get through this, which is about a 2% area. And what the hell is all these lines, man? So many little lines. Dots, sorry, lines. So it has to go through this area. And once it does, well, guess what? You end up with a little head and shoulders breakout. And if this breaks out, then it pushes this structure and then everything, goes to the moon. So what does that signal? Well, that signals dollar weakness. Right? We still have a ways to go, but projecting as to what possibly could happen, you would see a breakout from here, which suggests would break this structure here, which suggests dollar weakness. Okay. When the dollar is falling against the Turkish lira, you know something is fucked up, majorly fucked up. U.S. dollar ruble, even the dollar is falling against the ruble. Imagine that. Imagine that. USD CAD, right? Dollar's falling against the CAD. Australian dollar is about to break out to all-time. Is about to break the long-term trend line, right? Technically, it's done it already, but again, giving it the benefit of the doubt. Why did it technically do it already? Because this is more proper. Breakout, pullback, build pressure, boom, off to the races. Okay, but we're giving it the benefit of the doubt. See if it can break this, and it's doing a fine job. Okay, this is the last line of defense. So what does that mean? Dollar weakness. New Zealand breaking out. Look at that. Beautiful. Again, I think I was telling somebody, I forgot, that you want to hold these currencies for a while. You don't want to be selling these things. You buy small incrementally and let them go. These things, you want to build a nice position and just fucking let it rip. Okay. China, dollar, new lows against the yuan, right? What does that tell you about the dollar? Not very strong. From the support area, it's another almost 3%. Okay. And here's that Euro index I was telling you about. Right, here's the compass. Here's the wedge that is formed. 1, 2, 3. It broke out, came back, tested, breaking out again. We're looking for more upside in the euro. 10-year, still holding up. Still holding up there. So that's not, that's not good for the economy, right? And that's why I'm saying that you're going to need more QE to push down the longer term rates, okay? So you can make it cheap for people to borrow. Now, if you look at some of the data, I think I have it here. All right, here it is. And we'll start talking more about macro now. So I recently did a video where I was just explaining big components of since 1871. The big components of what happened in the charts in the S&P 500, right? Includes all the world wars, all recessions, all the, you know, depressions, everything. And you start to see how much different of an economy we are in today than we were in 1950, 1970. What did it take for the economy to grow? What did it take for the stock market to grow? And you'll see some real basic fundamental things, right? And these basic fundamental things, I start out the video by showing you that when you look at airlines, right? Airlines are dependent on passengers. They're all competing for the same passengers. When the passengers are not there, the airline goes down. The airline stocks go down. Right? This is fundamental. It's the same thing in the real economy. When the real economy is not there to support the stock prices fall. It's no different. One is passengers and the other one is the real economy. But it's the same thing. So when did we have a Great Depression? Well, we had a Great Depression in 1929. Why? Because the only place to make money in 1929 was the stock market. Everybody thought that if I just buy a stock, then I can go on living my life, and they forgot about the real economy relative to price. Good luck trying to convince somebody in 1928 that that's stupid, right? You would have been looked at like a maniac. But this is what's happening today, right? We had a nice conversation yesterday with one of my subscriber friends. When you have the big companies, Google, Facebook, and they're doing what? How are they making money? Advertisement, right? This is not a real economy. You can't run an economy based on, hey, buy this, right? In the video, again, I talk about how consumption is 68, and it used to be 69, but whatever, 68% of GDP. These are limits. In 1950, it was 60% of GDP. Right? In the 70s, I think it was 66 or something. Or no, I think it was in the 70s. It was 60. So you have an upper range of 68, and you have a bottom range of about 60%. Well, when consumption is at 60%, somebody else has to be fulfilling the other part of the economy, which is either investment or the government. Well, government back then was 24% of GDP, and consumption was 60. And the debt was down to, in 47, it was down to 35% of GDP. In 1970, it was 58, I think. And now we are 130 plus percent of GDP. What was household debt in 1950? Less than 20%. What is it today? Well, you can see it right in front of you, right? It's actually higher, but 80% of GDP. Okay? So you need to keep pumping the market and the economy with dollars. But if those dollars are not creating more GDP relative to what you are creating, you end up in a bad place. You end up somewhere where you don't want to be. And that's what's happening now. We are in a place we don't want to be. Now, we had another discussion that, well, what if we just get rid of the student loan right in here, which is the red? Well, what are you going to do? You're not going to do a whole hell of a lot. And the reason you're not going to do a whole hell of a lot is, one, because those monthly payments, they're very small. It's a small interest rate. Oh, this is frustrating. Sorry about the messaging. The interest rates are very small. The payments are very small. The average student loan is about 15,000. Okay, those people are the ones that make the higher salaries as they uh, get jobs, right? So that 130, in terms of discretionary of their total income, which is higher than everybody else's who doesn't have a college degree, is very small. It's very small. Now, you can nitpick and cherry pick which phase of their life they're in. If they're just getting started out, they're not making as much money, they have no savings, they haven't established themselves, that's going to be more meaningful, for sure. That $130 per 15,000, whatever, is going to be more meaningful. But to somebody that's making, $100,000+, it's not going to be very meaningful, that $130. It's going to be very small. Now, if you go back in history and you look at oil, which is not a portion of the economy, of the population that is going to benefit from forgiving the student loan debt, it's the entire economy. Everybody benefits from it. Whether it be plastics, whether it be gas, whether you're taking SEPTA, or which is SEPTA in Philadelphia is the public transportation, whatever the case may be, everybody benefits. So we went from about $5 on the high end in oil, all the way down to less than 2.5. Did we see more economic growth? Answer is no. What about mortgages? 2008, we had those mortgages, they got refinanced, they dropped, believe me, a lot more than just $130 a month. That payment came down. Did we see more economic growth? No, we didn't. On the macro level, right, you're not going to see a whole hell of a lot of a big difference. Okay, it's just the people that lend out those dollars are going to get their money back ASAP. Okay, they're going to make that they're going to get their money back. And then you can say, well, they're going to go out and spend. Well, that's not the way it works. It's not the way it works, because those dollars are not part of the functional productive economy. They're net savers. So they just save it. And remember, loans create deposits. So all you're doing is just wiping out something, but you're increasing it somewhere else. Well, where are we going to increase that 1 point whatever trillion dollars? 0.3 whatever. Right? We're going to increase it in the public debt. Well, what does that do for the dollar? It weakens it. So, who's benefiting? If you have to pay more to consume something from China, is that good? Right? That's less discretionary income because you're paying a higher price because the dollar is weaker. Yeah. Anyway, to maintain that very high consumption of 68% of GDP, you need certain things to go right for you. You got to have a growing population. That's number one, right? We got to be educated. You got to have a growing population. You got to have increasing deficits, increasing private money creation. Okay, because that's going to create a boom. Now, in the long term, that's going to catch up to you, but in the short term, that's going to be very bullish. Well, what do we have now? Now we have the opposite. You have a shrinking population in the workforce. You have debt that was shrinking up till now. Now it's starting to go up. If you look at the household debt, it's starting to rise again. Okay, but can you raise it from 20 to 80% of GDP when you're already at 80 and you're going to 100? Right? Law of diminishing returns. It's not the same amount of an impact. Are you getting that GDP growth? No, you're not getting it. Can you lower interest rates to make borrowing cheaper? No, you're already at zero. Right? So what do? You end up with helicopter money. Well, it's just temporary. Really? Really? Well, we're coming into December when all these things, run out. And guess what? They want another stimulus to push it into the next year. So helicopter money is the new QE. The QE, when it was first introduced, oh, it's just temporary. Don't worry about it. Once things get better, we're going to unwind it. Did they unwind it? No, of course not. So you see, again, maintaining that 68% consumption is where it's all at. And if you look at today's retail sales, right, they came in at 0.3. Right, they came in at 0.3. They were supposed to be 0.6 or something. I forgot what it was. But clearly, the economy is starting to stagnate. Right, as the stimulus money starts to stagnate, get spent, then you end up where you're starting to drain that money into profit savings. From household income to savings equals profit savings. And let's take a look at that real quick. All right. So if you haven't seen my videos on how building an economy from scratch, please go and look at it. So you're pumping in those dollars. It goes to household income, and then that gets saved and becomes private sector too, right? Top 5% becomes profit savings, and profit savings goes to the stock market. So we bumped it up with $600 stimulus check, helicopter money, and then it's coming down now. And what you're seeing is the retail sales are starting to, I shouldn't say down, but they're starting to stagnate. The economy is starting to stagnate. Inflation is crap, right? But those trillions of dollars were pumped into the top 5% that went into asset prices. And now you're sitting here looking at the asset prices and saying, oh, they're going up, bullish. The market is a forward-looking indicator, blah, blah, blah. Yeah, okay, sure. Yep, very forward-looking. You give me $4 trillion, I'll show you what forward-looking is. So anyway, um, it's a very good video. You gotta, I know most people may not understand it because you gotta understand certain basic things, but it's important. It's important to understand that video, and if you don't, you can ask me questions. Now, this is only for subscribers, so you gotta subscribe, and here's the time I gotta plug it in. Don't forget, come down patreon.com/RealMacro. Okay, 66 cents a day, 63 cents a day, sorry, something like that. And please like and subscribe the video below. All right. So finally, we're getting another drop in Nasdaq, but it's not following through. Not following through. How about the S&P? We need to see follow through. Broke down from the trend line again, but no follow through so far. Let me fix that there. Okay. No follow through. Dow Jones, a little bit. New York Stock Exchange, no, not a big deal. Transportation still up. All right. Not very convincing of a drop, is it? And maybe that's why it's not following through. At least not yet. How about the FANGs? Nothing. They're still flat for the day. All right. Jets, flat for the day. Nothing. Now, remember that um, I've been saying, let me see if I have it here. Yeah, there we go. Apple, right? That this is a leading indicator. I adjusted it a little bit to give it some leeway. All right. So what you'll see here, let me take it. There we go. So what you'll see here is that you have the market overall doing better than Apple. And Apple has been the leading indicator. And then if you go back in time, you'll see that Apple was flat while the Nasdaq was going higher, and of course, eventually started to correct. So now again, we're seeing that Apple is suppressed in terms of growth relative to the S&P that is more bullish, and this one is flat. Right. Subtleties for sure, but keep an eye on that. All right, let's look at, let's see, 3:49, 10 minutes left to go in the trading session. Overall for today, market is down 0.5%. Real estate is leading with 0.16 up. Energy and consumer discretionary is leading, and lagging is utilities, healthcare, consumer staples, and again, information technology towards the low end. Last 5 days, energy, information technology, which is good, right? You want this to lead. This is the market leader, up 2.89%. Laggers, utilities, materials, and healthcare. Now, I would say that this is a little bit more bullish looking on a 5-day look back because technology is second, right? And what we're seeing is that energy, which was one of those beaten up sectors, is really bouncing. Okay, it's making a little bit of a comeback. All right. Another thing to note, the earnings yield of the S&P is at the lowest end that we've seen it. I think 2.74 is the lowest. So something that I was saying when markets were going up, and I kind of gave up on that 1, 2, 3 going down, and this is what I mean. Right. What I was expecting was this, that you would get 1, 2, 3 down, and then we would start to go up. That never happened, right? So that cost me in terms of trading big time. All right. Unfortunately, but it cost me. Anyway, um, what was I saying? I'm still having one of those Pink Panther, where the guy is twitching his eye moments when I talk about that because it really pisses me off. Um, there was something that I wanted to say about that I was expecting this and I was relating it to something else and I forgot what it was. Mm, don't remember. Anyway, it'll come back to me. It'll come back. All right. So anyway, we're looking for this to correct. All right. Doesn't have to be a very convincing kind of move. What you want to see is something that's going to start to come down and test the previous lows, at the very least. And then perhaps there it can bounce. Right? All right. Yeah, so the earnings yield is I think what I was talking about. Yeah, so when the earnings yield, when you're seeing that interest rates are rising, right, and then you have the earnings yields that is falling, right? We're at 2.75. This is almost zero point 0.9, let's say. Okay, you get that compression in here. Okay, that makes um, stocks less and less appealing. Before this whole shitstorm hit, anytime it would drop below 4% in the earnings yield, and interest rates were higher then, they were, I think, 2.5 or something. Anytime that the earnings yield dropped below 4, you would see a bounce in the market. In the shitstorm, we went way, way, way below 4%, but interest rates did come down as well. They were at 0.6. Okay, but even so, now with the interest rates rising, and we're accepting lower earnings yield, you got to believe that this is going to start to weigh on the market. Any questions? Quickly, I don't think we covered them. RTX. Is that a ticker? Yes. Okay. Let's take a look at RTX. I'm not sure what this is. Oh, Raytheon. Yeah. This is part of the war machine. Always buy the war machine, my friend. Since 1973, you have not gone wrong buying war machine. And I had, when I was young, I guess I was around, I don't know, 17 or something. I didn't have a clue about stocks. I worked at a restaurant next to the Philadelphia Stock Exchange, so I knew all the big guys. Uh, and the one guy's like, "Look," he goes, "You don't know what you're doing in stocks and this and that, and I'm sure you're not investing." He goes, "But what you should do is you should go out and learn how to buy stocks, and the stocks you want to buy are the war machines." He kept telling me that every single time he would fucking come in to eat. Don't forget to buy the war machine. Don't forget to buy the. And I'm like, what the hell is this guy with the war machine? Whatever. 32 years later, I'm 50 now. I'm like, damn, that motherfucker was smart. Had I done that, geez, I would have been fucking, you know, fucking rich as shit if I understood what he was saying. He was an elderly fellow. Um, but he was right, and I'm not going to go against his advice, even though it's 32 years old. Never ever give up the war machine. America's all about wars, right? Always buy the war machine, all of them. All right, yeah. Let's chart it out, even though it's a waste. But yeah, it's got some difficulties here. But I would chalk it up to range expansion more than anything else. You know, daily, yeah, we can do daily as well. It might need to correct and test its previous low. Granted. Uh, where is the my little tool? All right. So you get the drop, you get the pop. Okay. Now it's building that pressure right in here. My, in my opinion, okay, this could come down into a wave three and then bounce. This is possible. Because remember, Raytheon doesn't only do the war machine; it does a lot of the aviation stuff as well. So it's tied to airline manufacturers like Boeing, right? And Boeing has completed the down leg within this channel. Now it's starting to push back higher. Pratt and Whitney, um, all those, uh, I guess call them war machine, whatever, that are tied to aviation. All those are in trouble right now. They're going to have to consolidate a little bit. The airlines are retiring the big airplanes. They're going back to the uh, you know consolidation shrinking mode for now. What you're going to end up seeing is that smaller smaller airliners like the Airbus 320 LR, LR stands for long range, are going to become the new preference. You can go from Toronto to London nonstop, 7 hours in an airplane that can carry, about 220 people, as opposed to a 777 that holds 450 people, right? Um, so there might be some benefit to that as they make more engines for smaller airplanes, but manufacturing of airplanes right now is a little funky. There's a lot of canceled orders. You gotta wait. You gotta wait for that. Personalized small flights. Yeah, it's just more focused. What people don't understand about the big jetliners, and it's almost closed, but I'll say it. Speaking of aviation related, HEI. Yeah, this thing is going to the moon. These are HEI um, it provides things, right, for the manufacturing. What's it? I'm not familiar with. It's not that I'm not familiar. I haven't kept up with the aviation stuff. Does it manufacture something for airlines to make doors or some shit like that? Landing gear? I forget these things. Anyway, what they don't realize about airliners is that uh, big major airlines, not low cost, but big major ones, they make money off of first class mostly, business travel. And then all us retards, the rest of us, yeah, make spare parts. Yep, exactly. What the rest of us do is we're just there to like fill up the gas tank. So our ticket to Greece, let's say for $1,100, $1,200, is not so the airline can make money. It's just to pay for the fuel. The vast majority of money comes from first class, and then the passengers, and then from the passengers it goes down to cargo, and it's just they're more like fillers. It's not where they make the money. Now, having said that, the big jetliners uh, are good in another sense, that they feed the domestic regional flying. So, for example, when I was in Olympic, we used to have Olympic used to have flights to New York, Boston, Montreal, Chicago, right? And then when that route ended, because it was too expensive to operate um, the Airbus 340, what ended up happening was that we lost other destinations like Beirut, Cairo, okay, that were feeding through the system, the regional, right? A lot of domestic started to die off because they started to fly British or Air France KLM, right? Or even Emirates in some cases, because Emirates does now Newark to Athens. So that kills the domestic airline routes and it shrinks it. So while the actual route in of itself made money in the summer, in the winter it wasn't making money, and people are like, oh, let's get rid of this one. Well, yeah, but it also affected the domestic market greatly. It also affected hotels because people would stop over 2, 3 days in Athens, go spend some money in a hotel, restaurants, maybe shopping, so that added to the economy. And then, you know, you got to look at the whole package, right? It's not about the ticket price. There's more to it than that. So now going to this more smaller airplanes doing longer distances is beneficial, right? Because you have to fill up less people. What is that telling you that the airline industry is seeing going forward? Right? Not enough growth, not enough people in the near future to be able to support wide body aircraft. Maybe that's going to be offset by more frequency, perhaps, but we'll see. We'll see. I don't think that's a good leading indicator. If the airlines are seeing that big jumbo jets like the Airbus 380, the 747, the 777s, they're not they're not there. The market is not there for them. Well, that's not good.